It is DroneShield. Shares having tumbled after warning margins would come under pressure as sales mix, currency movements and one-off costs weighed on its profitability. First half gross margin expected to fall by 60% from 65% a year earlier due to higher contribution from third-party hardware sales, raw material impairments linked to production facility relocation and rollout of its new ERP system. The counter-drone company telling investors that its expected first half revenue is likely to rise 74% to close to $126 million, with FY26 revenue expected to reach between 250 and 270 million. That's growth of up to 25% on the prior year. Has announced $23 million in contracts from reseller Cobbs Bellox for delivery of vehicle-mounted counter-drone systems to a European military end customer. So shares now having fallen to their lowest level since December last year. Rudi, what do you make of that update? And it has been a market darling, of course, but that has diminished somewhat.
The average return for the 200 stocks in the ASX 200 is almost minus 5%. So it's actually not too bad, if they say.
Says the pessimist.
Listen, I have a inbred resistance against overcrowded trades, and I think DroneShield has on many occasions been the overcrowded trade. There's lots of stuff I don't like about it. Those people specialized in putting valuations on companies, they most often than not believe that DroneShield most of the time is overvalued. I think there are my main gripe still remains with the guys who are leading this company and how they treat investors and all of that. So if I would go into this sector, I would go to higher quality alternatives. Codan comes to mind, Electric Optics Systems is another one. So I haven't invested in DroneShield. I've never considered investing in DroneShield. And I don't think I'll be standing in the queue anytime soon, but hey.
Well, and so why have you never considered it? Well, you just think it's been overhyped from the start?
Yeah, pretty much. And that's where the story ends and begins for me. Mm-hmm. I don't just look at the share price. I look at a lot more things than that. And if it temporarily goes up, well, I'm happy not to be on board.
Yeah. Okay. So if you're there,
I don't have FOMO.
I gather that. If you were there, would you hang on or would you sell?
If you were there, you're probably there for different reasons than I would. But the only advice I can take, you wouldn't sell now probably because it's the lowest in 7 months or 8 months. But the only advice I can give is that if you're more than simply a gambler or a punter, there's nothing wrong with every once in a while have a higher speculative investment in your portfolio. Just don't make them too large.
Yep. But of course, this is not advice. It's pure entertainment, is it not, Phil? And for entertainment value, what do you think?
Entertaining it is. 2 things that I've learned in my career, only 2, but I keep getting reminded of 2 red flags. Management leaves in a hurry, CEO, chairman, and a company implements a new ERP system. They've done both. The chairman and CEO famously sold all their stock the day after they could. Late last year, at the highs, banked tens of millions of dollars, life-changing, completely understood what they did, it was flagged and they sold it, and then they both resigned ahead of the AGM, so it's got new leadership. So that for me is a signal. People who've been there for a while dumped everything, not only just sold every stock they had, they left and they implemented a new ERP system. This was a $4 billion market cap company. With largely one-off revenue. They don't have recurring revenue. I think even in their announcement today, I think 85, maybe 90% of their calendar year 26 guidance is for one-off sales, so they need to sell every year. But they're in the right space. We know defence, we need to spend more, and they've got some good products. What surprises me is the margin pressure. Normally at this stage of the economic life cycle, margins should be improving. They flagged the margin decline from 65% to 60 for first cross. The other thing that surprised me was how wrong consensus was. They've guided to, I think, 250 to 270 mil revenue for this year. They've got 200 mil odd in the bag. Consensus was at 350. 350. That's like a 40% miss. So Analysts should have been aware of that, and maybe the company could have put out this trading update early because the market was just wrong. So I'm surprised it's only down 10%, where it's a 40%, 40% miss versus consensus. That's the analysts who are as much to blame as the company. That's a big miss. The potential silver lining, they announced some European contracts. They're still in their last, at the full year result. Their pipeline includes a large contract, European contract, that they say is worth about $750 million. Massive. They announced 30 mil today. Maybe it's the same contract, maybe it's not. But there's potential more work out there, which they've been silent on today by the sounds of it. We'll get an update with that in August. If that's still out there, this stock could ratchet up. If that's gone away, this stock's going lower. It's down 50% calendar year to date. I would wait for the full year result where we get the full set of accounts, we get an outlook statement that's more detailed, we get an order book, a pipeline. So I'm going to call it a wait.
A hold.
A wait.
A hold.
Wait.
Right, wait.
You're not supposed to win there, and you just have to wait.
Yeah, all right, I'm calling it double
for
hold, even though Rudi
Yeah,
wouldn't want to be there in the first place, and Philip is waiting.
Yeah.
That is our stock of the day, DroneShield.